Hi, what's up, guys? This is Sage Tyner from FOREX Empire. Welcome to this session. Today, guys, we're going to expand on the concept of liquidity, and we're going to touch on one concept or one model of liquidity, that is equal lows and equal highs model, right? So we're going to expand on that concept and explain further how they actually create that liquidity, how it is traded, and how we should actually trade equal lows and equal highs in the forex market, right? So the same idea or the same concept is what we're going to apply on the other models that we actually cover, right? But for further information on that, you have to DM me, of course, and I get to explain that to you, right? Okay, so let's get straight to it. All right, so you're going to see that at some point price is going to be maybe dropping, and it will create a low, right? So this to forex trader is a resistance that the market has already created, right? So they expect, or we expect as retail traders, to see the market coming back to bounce on that zone, right? And many times it's going to be respecting that, right? So as they respect that zone, we're going to create what we call equal lows like that, right? Equal lows like that. Let me do this. We're going to create equal lows like that, right? So the creation of equal lows means that just below these lows we have liquidity. It's more like the sell stops liquidity, but this is equal lows liquidity, right? So we have liquidity that has been created below this low, right? So many traders, they think of this: if price is going to come back to this zone, they are going to take what? Buy trades on this zone, because they think that this is a strong support zone, and there are actually other traders who have jumped into the buy trade already. So it means at this very point in time, we have buyers who are already in this market, who are already enjoying some profits, right? Let me actually put this thing here, right? So it means we have buyers who have already jumped into this market, and they've put their stop losses slightly below this red zone, right? Red zone, that's where they took their trades. The green zone, that's where they expect the trade to actually move to, so that they make profits, right? So we have these traders who believe in support and resistance, right? These are retail traders. They're actually buying those zones, right? Then we also have the other group of traders. The funny thing is, retail traders, they're funny, right? We are funny, right? They're funny, right? At that very zone, right, we also have traders who actually believe that if price is going to come below this zone and breaks this zone, they believe in impulsive selling, right? The moment price breaks this zone, they're going to sell, or they're going to use pending orders, right? With break and retest, they're going to use sell limits, or with just a break impulse entry, they're going to use their sell stops there, right? So we'll also see that other traders believe that if this market is going to push down, they actually put their what? They actually put their pending orders there. They put their pending orders, believing that if the market moves below this zone, we are going to sell, and price is going to do that. But then the market makers will be thinking in their own way, right? They won't be seeing that. They will actually be seeing you do this, put in your orders. Remember, they will be seeing everything that happens, right? They have your account. The moment you log in, they have access to the money that is in your account, right? They can see the number of buyers, they can see the number of sellers. So what they're going to do there, they're going to manipulate that law. They're going to manipulate these setups, right? So what they are going to do there, let's look at this model, right? So equal lows, this is what they're going to do, right? The moment you see equal lows, don't be quick to jump into buys when price comes to this zone, right? Because many times they will react to this zone, but they will just react for a short period of time, and you begin to celebrate in profits, thinking that you're going to win on this setup, right? You are celebrating, you are in small blues there, you leave your chart, right? You'll be like, I'll come back, I'll be patient, I'll come back in profits, right? Before you realize, they will start dropping price so that they collect the liquidity that is lying below those equal lows, right? So they're going to move price like this, and they hit those lows. The liquidity has been grabbed, they have hit the stop, so that's a stop and move that they're going to bring, right? At the same time, there is the breakout trader who has his sell stop. The sell stop at this very moment will be triggered, and it will be in small blues again, right? It will be sold, or it can be the same trader who actually took a buy trade there, right? Then others who actually have their sell limits, they'll be waiting. Price will actually come back, retest there, right? So as they are retesting that zone, right, they are actually in what? In profits. They are actually, they'll get triggered, sorry, right? So the moment they get triggered, they're in small profits and they are celebrating, right? But the market makers now will be having a whole lot of liquidity. They will have collected liquidity. They're selling, sellers celebrating, right? But before we move to any TP there, this is what the market makers will do. They will just bring a fast move like this. This is what they will do, right? This is what they will do. So this is the moment where your first trade or your first buy, you say, I've lost to the buy trade that I have just taken, right? But now the price is moving in my direction. So where have I actually missed? So we'll cover that, right? Then the sell traders will be like, this setup was so clean. It actually retested the zone. Why have it hit my stop loss now, right? So to the market makers now, they have collected all the liquidity, right? They have grabbed the liquidities that are actually lying below these equal lows, right? So in this session, I'm going to teach you how you treat this situation, right? How you treat this situation, right? So this is how they're going to be manipulating equal lows. This is how they trap both buyers and sellers around the region of equal lows or equal highs. The opposite is true for the equal highs. I'll just explain with equal lows. So this is the model. This is the model that you should understand, right? Okay. So the moment you see price creating equal lows like this, so long they're equal lows, right? Maybe they come for the third touch like they try to do at that very spot, right? Or they manipulate. If they manipulate, if they hit those equal lows, wait for price to come and break the what? The previous highs. That's a BMS. Wait for price to create a BMS there. After creating a BMS, remember, this was a stop and. So if it is a stop and, they've collected liquidity, meaning that they no longer have business to the downward, to the downside. They no longer have business to the downside. So what is it that they're going to do next? Remember that we have created a demand zone already. So if we have created a demand zone already, what is it that they are going to do, right? They're going to bring price back. We have a BMS there. We're going to bring price back into this zone. Then we take our buys there. Then we're going to enjoy profits. Back to those highs, we take our TPs and more profits there. So this is how this setup is going to be work out, or this is how we are going to trade this setup as smart traders, right? This is how we make money with this concept, right? So let's remove all that debt. It's now dead, right? Let's remove all that and focus on this what? On this setup, right? So this is how we're going to treat this setup, guys. This is how we're going to trade. So the moment you see the equal lows right there, wait for your price to come on the third touch. Don't end up there. Don't trade the breakout, right? Let them break the previous highs they've created. So they hunt these equal lows. Wait for that stop and. It's a stop and. They hunt those equal highs. They break these highs. Wait for your price to come back into this structure, right? This demand they have created, or the order block that caused the stop and, right? Usually what they do, they give you one candlestick, one big candlestick that moves below these lows, one big candlestick, and one other big candlestick that comes back into the structure there, right? That will tell you that is a stop and these candlesticks will be very, very big compared to the candles that are actually in that zone. So it tells you that it's a stop and. We explain that in other sessions, right? But let's get to the chart and look at this example, or this example in the live charts. All right, so let me go straight to the live chart. Okay, so this is V75 that I'm going to use for this example. Let me scroll back and get to where we have equal lows or equal highs. Okay, let me start with equal highs. So if you look at this very point, guys, right, you see we have equal highs that are at this very spot. Price tap this zone, tap that zone, is failing to break that. So they've created liquidity that is lying just above that what? That is lying just above that zone, right? So there is liquidity, there is a whole lot of money that is lying above that zone, right? So they bring this move to trap that liquidity. This is a stop and they've trapped this liquidity. This is a market maker move that they have just caused, right? So after that, guys, you look closely to price. Look at what price did. They came back to break these lows. They came back down, they broke these lows, right? With this move, after trapping the liquidity, they will move faster, right? So if it is stop and it will be a fast move of that zone. They would want to be seen in that zone. So they move fast, they break the previous lows. So if they break the previous lows, what is this that you are going to do? You are just going to mark the demand, the supply zone in this case, because they're equal highs, right? You mark that demand zone and wait, or put your pending orders, you wait for price to come back to that demand zone, and you get clean or nice sales in that zone. So in this case, this is what they did, right? Let me actually mark that very low, right? So this is what they did. Price broke this very low. So the moment they're coming back to these highs, guys, look at this, look at this. This was a sniper entry just on the zone. The last two book candlesticks created our what? Our supply zone, right? So they just came to that and they tapped this zone and they moved very fast away from that. This is the setup that I've just explained to you, right? The opposite was true. I was explaining on equal lows, the opposite is true, right? So let them hunt that zone. They break the structure. When they come back to that supply zone they have created, we take our sales now. We are now merging this concept with our structure that we actually learned, right? The same thing, they actually broke these lows again, right? They managed to break these lows again. This is a BMS. If you don't understand this concept, look back to our channel. You see on the videos, you'll see this concept being explained, right? This is a BMS. The BMS, it will tell you that price is continuing to go down. Now price corrected all the way to this zone. They just came to that zone, guys. They're tapping that zone. They confirm you are in sales and you enjoy all this drop. This is how you treat equal lows and equal highs. Wait for them to hand, wait for them to trap retail traders, then you join into the market. Let's look at another examples, right? Another example, right? In the previous video, I actually talked about these previous lows, right? So we have a previous low that we actually seeing at that very spot, right? Let's look into it and let's see how we will actually trade this zone, right? So this is an equal low, right? Let me expand it to the right. Let me zoom like this and let me expand this to the right so that you see clearly what happened there. Okay, so this was an equal low, right? So this was an equal low. Okay, so this was an equal low that we had there. Look at what price did. It went all the way up, then they came down, guys. They broke this. Pa! Two candles, like I told you, one big candle, pa! Below. They are just grabbing this liquidity, right? It's nothing but grabbing the liquidity that is just lying below this what? Below this zone, right? They're grabbing this liquidity. They're hitting all these stop losses. They hit that, right? So now what do you have to do? You have to look into your structure now, maybe the immediate structure, right? So in this case, there was an immediate structure that we had here. We had this high that price had created, right? So you wait, your price moves back, right? They break this previous high. After breaking this previous high, guys, what do, right? You are now applying your supply and demand concept, right? You wait for your price to come back to the what? To the demand that price had created, like that, right? You can actually use this zone, right? Let me actually use this zone, exactly, right? So price breaks this is a BMS. Price breaks this, it comes back to that demand zone, guys. Boom, easy trade. We take our buys from that zone, then we enjoy all these what? Profits. This is how you trade these equal lows. Be patient for them. The moment you see price grabbing that liquidity, wait for your structure break. Price breaks these highs, right? Then you wait for the retest to that zone, right? That demand or supply zone, in this case the demand zone. Then you take your buys from this demand zone. It will be strong, it will hold, and you win all those profits. This is how you trade this setup. Hope this setup is clear, guys, right? Let's look at another example, or the last example, right? So the last example is actually a current setup that we have, right? So we can see that price created our equal highs there, right? So after creating the equal highs there, price managed to move back, right? It managed to move back. It took this liquidity. So this was a stop and they took that liquidity. So it means to the upside, there is no business anymore to the upside. Price is to go down, right? After the stop and price moved, it managed to break the previous low. right, that caused that stop hand. So we managed to break this previous low. This is a BMS. If you don't know a BMS, go to our previous videos and get to learn about that concept, right? So after this, what do we expect? We expect our price to correct all the way back to this zone. The moment we see price in that zone, guys, we don't hesitate. We take ourselves and make profit of this setup. Why? Because we actually know that liquidity has been grabbed to the upside. There is no more orders to that side. There is no more money to the upside. They no longer have business to this side because they've grabbed liquidity. What's left is for price to drop and go deep down to the sell side, right? So this is how you treat this example, right?